You have been losing money trading supply and demand because of this. Everybody willing to trade this demand is in the hope that in the future price will impulsively get into the zone and then they take an entry. But you've been failing because you need to also remember that this is the liquidity that's being built. They're giving you the hope so that you can buy over there. Once that happens, a panic trader is already changing their analysis. They're looking at this trend line. They think that's the third touch principle and they want to buy off of that trend line. But if you look at it carefully, that is the liquidity that is being built and it's being swept out. Initially price then comes to the very same demand to which we want to execute from. Let's look at one of the examples on GBP USD. When you look at GBP USD, this move up was initiated by this candle over here. So we've got demand over here. Soon enough in the future, this down move, we would have expected it to come as low as the inside of the demand before we initially take off. But that doesn't happen. Actually, what happens? Price builds liquidity. It buys off from this zone. In the future, if you were holding this buy based on the fact that it's a higher low and you expect for price to create multiple higher lows and probably higher highs so you can continue buying, you're being kicked out by the sweeping of the liquidity. So you've become liquidity if you bought here. You've become liquidity, you've been swept out, and then only now price is reacting into the demand.